Good morning, good morning, good morning. I don't know why I sounded like that this morning. That was a bit weird. Where's Michael Brown? Here he is. So quick. There you go. Connecting. Good morning.
Good morning. Hello. I
How are
wasn't sure whether
you?
there was anyone there. I'm all right. How are you?
I'm all right. Thank you for asking.
Good.
Well, it's Friday. We've done it. We've made a whole week. Go on,
Surprised as
over
you
to
are,
you.
to be honest. But you haven't done your
Oh, yeah.
legals yet.
Oh, yeah. God, yeah, that would help, wouldn't it? One
Oh,
second.
dear. Especially with
Hang on.
you around.
Well, this is it. It truly is a necessity. I can't even find me. Oh, there it is. So, as usual, nothing discussed on this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite or its affiliates, including the hosts, which is the awesome Mr. Brown and my not so awesome but get in there self. What happened yesterday, Mr. Brown?
What did happen yesterday? Good morning, everyone.
I don't know. This is what I'm asking you, mate, to be honest.
Happy Friday. It was another relatively risk-off day, actually, in the equity space yesterday. Some choppy trade throughout the session, but ultimately the market ending the day in the red, with the S&P 500 down around 0.5% and the NASDAQ down 1.1%. The NASDAQ closing below 19,000, while the S&P 500 closed below its 50-day moving average for the first time since early May, which is a couple of interesting bits of context on the move lower that we've seen over the last couple of weeks. Although, as I put out in a tweet yesterday, I'm still convinced in the bull case and see this as merely a blip rather than any sort of prolonged change in trend.
You know what they say? You know what they say? Everyone loves a good pullback.
Oh, God.
Well, no, that's normally a pushback, but yeah.
I don't want to know where you're going with that. Let's move quickly on to the rest of the markets yesterday. The Treasury space, relatively quiet. The 2-year yield holding steady, just shy of 4.45% for the majority of the day. And that relative calm in the fixed income space saw the foreign exchange market also remain relatively quiet, with the dollar index choppy between 104.10 and 104.40 for the majority of the day, albeit it must be said there was some notable softness in both the Aussie and the Kiwi dollar for the second day running, both of those down by around 7/10% apiece, clearly facing headwinds as equities take a lurch lower. Gold also faced headwinds yesterday, down 1.4% on the day, and this morning testing the 50-day moving average to the downside at $2,360 an ounce, while crude did gain the front WTI contract just shy of 1% and notching first back-to-back daily gains in a couple of weeks. In terms of catalysts, data and news flow yesterday, of course, all eyes were on the first estimate of second quarter GDP out of the United States. A big beat on that metric, actually. The economy expanding by 2.8% on an annualized quarter-on-quarter basis in the 3 months to June, well above the 2% that markets have been expecting and considerably quicker than the 1.4% growth rate that we saw in the first 3 months of the year. That does, of course, mean that the US economy has now notched a GDP growth above 2% on an annualized quarter-on-quarter basis in 7 of the last 8 quarters, which is, of course, very, very solid indeed. Along with the GDP numbers, we got the Q2 core PCE price index, of course, this being one of the Fed's preferred inflation gauges. That rose by 2.9% in the second quarter of the year, modestly quicker than the 2.7% the markets had expected, but a chunky decline from the 3.7% that we saw in the first quarter of the year. In terms of other data yesterday, US jobless claims marginally better than expected on both the initial and the continuing metrics. Continuing claims falling to 1.851 million in the week to the 13th of July. That's down from the prior 1.867 million. And of course, the continuing claims print coincides with the July non-farm payrolls survey week, which perhaps bodes well for that payrolls figure that we get next Friday. Of course, it comes around quicker every time.
August already.
I know, time is flying. We also had, as if that wasn't enough US data for one day, we also had the June, durable goods orders data. Durable goods orders falling a whopping 6.6% on a month-on-month basis in June. We were expecting a rise of 0.3%, and they're at 1%. I haven't dug into the data, but the durable goods orders figure is notorious for being skewed quite easily, particularly by aircraft orders and particularly by Boeing orders. Helpfully, there are a range of other metrics published, including the capital or non-defense capital orders excluding aircraft, which hopefully gets rid of most of that distortion. And that metric actually rose by 1% on a month-on-month basis. So I don't think the durable goods orders data was quite as much of a disaster as that headline metric would perhaps imply. We also had, just lastly, I skipped over this, forgive me, the German IFO surveys. I won't run through all of the metrics, but all three prints were below the prior
I've got a
figures
meme for that.
and considerably. Well, I'm sure you've already used
many
it,
times.
and below the and below the bottom of the Bloomberg forecast ranges. In terms of news flow, yesterday the US auctioned 7-year notes, $44 billion worth. That stopped through the when issued yield by 0.4 basis points, so relatively solid there. In sticking with the kind of fixed income side of things, we had another weekly repo operation from the Bank of England. Banks borrowing 30.4 billion in that repo operation. That is another record high, and I think it will be interesting to see whether Governor Bailey, his press conference next week, is perhaps asked about that and the continued signs of a potential funding squeeze that are taking place within the banking sector in the UK. And of course, that comes ahead of the annual quantitative tightening balance sheet review, which is in September. And last but by no means least, Meta are going to be hit with an EU antitrust fine. This is according to Reuters. No, apparently this is the first.
Oh, really?
Well, their first. Their first, I think, not the first ever. This is Meta's. This really relates to Meta having linked something called Marketplace with Facebook. I'm not great with technology. I'm certainly not great with Facebook, so I have no idea really what that means. But nonetheless, it is expected that that decision is handed down after the August holiday break, because of course the people in Europe are not going to do anything in the month of August. But it is worth bearing in mind, of course, because we do have earnings from Meta due next week. I believe next Wednesday after the market close. So it will be interesting to see if that comes up on the earnings call.
Give our listeners a 30-second kind of 101 on what the repo means, because obviously everyone talks about the.
Oh, do I have to do this again?
Well, I think it's very good. I think no, I think it's really good. A little bit of an explainer in simple layman's terms.
Oh, fair enough.
Imagine you're explaining it to me after 4 pints.
Oh, Christ. I really can't do it that simply.
Oh, wow.
Wow. In as simple terms as I can explain it, effectively what's happening is banks primarily are swapping assets, mainly gilts, for cash in order to cover various obligations that they have. And obviously, as the BOE conducts quantitative tightening, as they run down the balance sheet, as they actually actively sell gilts, that somewhat reduces the amount of cash that is kind of sloshing around in the financial system here in the UK. And that's why you're seeing usage of that repo facility increase quite rapidly, actually, week on week. I think last week it was about 23 billion, and we're now up at 30. So the pace of that increase is starting to get a little bit worried.
Exactly. Banks are sitting on a load of gilts. They say, hang on, we need a bit of cash. They can give them to the Bank of England, get some cash back, fund their accounts for whatever reason. Bosh. There you go. Nice and simple.
Yes, exactly that. But that's pretty much it for me. There's 2 week and geopolitical.
Thank you.
Rundown.
Well, our geopolitical headlines, because of our friends at News Corp, as usual, we start in the Middle East. The crux of it is Gaza ceasefire talks and hostage. Israel seeking changes. Hamas are seeking some changes. Biden is expressing the need to get this done as soon as possible. Obviously, we all hope this is possible, but the goalposts are moving all over the show from both sides. So that's the gist of it. It's very much this kind of will they, won't they? Trying to move away from there as quickly as possible because it's just the same old.
That's probably wise.
Exactly. Houthi affiliated media reports of 5 US British raids on Hudaydah airport. Syrian observatory said US warplanes targeted with heavy machine guns in the areas of influence of pro-Iranian militia. What else we got? Security sources noted missile shelling targeting the vicinity of An al-Assad airbase, which hosts coalition forces. Moving further afield, we've got the Chinese Foreign Minister Wang. Stop it. Said in talks with his Indian counterpart that China.
I wasn't going anywhere, don't you worry.
I'll start again. Chinese Foreign Minister Wang said in talks with his Indian counterpart that China-India relations have an important impact beyond the bilateral scope of both sides to get China-India relations back on. Wang also said they hope the two sides will work in the same direction and actively explore the correct way for two neighbouring countries to get along. That's all I want in the world. Let's just everyone, can we just all get along, please? Is it too much to ask? What else have we got? Try and think that's about it, really. Yes, that's all I got. Nice and short.
Well, it was very nice and short and sweet. There was
like
one
me.
other story I was going to mention, less of the sweet. One other thing I was going to mention, which is quite amusing, I was just reading that as you were speaking, is the French. Of course, the Olympics start today.
Yeah, the old
and
sabotage.
the French are doing what they do best and setting things on fire. Railway lines this time. It's not city centres. It's not tyres. It's railway lines to try and stop people getting to and from Paris for the Olympic
Speaking
Games.
of sabotage, very good song by the Beastie Boys. I will be playing that.
Right. Well, I'll get through the day ahead quickly so you can go to your karaoke session. In terms of today, we've already had some data from Japan overnight. The Tokyo CPI figures for July coming in a touch cooler than expected at 2.2%, down from a prior 2.3%. Of course, this comes ahead of the Bank of Japan decision next Wednesday morning in the very early hours here in the UK. Markets are expecting a rate hike from the BOJ next week, but perhaps that inflation data casts a little bit of doubt on whether the BOJ will deliver a further hike in 5 days' time. In terms of the rest of today, it is mercifully a relatively quiet economic calendar, and although the weather may not feel like it, it is a summer Friday as well, so I would expect things to be relatively subdued across the board, although do bear in mind, of course, that equities have had a little bit of a propensity to move to the downside over the last week or so, and there is, of course, a chance that people continue to de-risk into the weekend. In terms of what we've got on the docket, the main event comes at 1:30 this afternoon with the June US core PCE report. On the month, core PCE expected to rise by 0.2%, up from the prior 0.1%, but on an annual basis, core PCE should slow slightly to 2.5% from a prior 2.6%.
Let's remember quickly before you tell us the forecast and that stuff. Just remember that the PCE, the Fed's preferred measure of inflation.
Yes, of course. The forecasts for the PCE print should be very, very accurate because we had the Q2 PCE figures yesterday, and you can strip out from that today's data pending revisions, given that we've already had the prints for April and May. And of course, you've got all of the usual inputs into the model as well: CPI, PPI, import prices, export prices, all of that kind of thing. Yeah, it was a bit like that. And of course, markets are pretty much fully discounting a Fed cut in September at this stage anyway, and it's tough to see today's data materially moving the needle on that one. In terms of other things to bear in mind today, we also have the final read on consumer sentiment from the University of Michigan. That index expected to tick marginally higher to 66.4 for a prior 66. That's, of course, the preliminary reading, the 66. Speakers, there are none, thankfully, unless any central banker decides to pop up on television unexpectedly, but there are no scheduled G10 central bank remarks throughout the day ahead. And of course, corporate earnings season continues as well. Before the market open, we hear from a few firms. 3M are probably the most interesting one. I find them a relatively useful barometer, actually, of the broader economy. It sounds stupid, but they make a lot of things, and a lot of things that you wouldn't really associate them with. So they're quite a good barometer of not just post-it notes and sellotape, but they are a relatively good barometer of broader economic conditions. Exactly that. That's the word I was hunting for, and it's really worrying that you had to bring that to my mind. But that's it. That is it for today and for this week.
Well, thank you very much, Michael, as always. Listeners, thank you so much. It's been amazing. You know what they say. If you can't be good, be careful. If you can't be careful, buy a pram. If you are trading today, keep it tight. Michael, thank you very much. Maybe if you're around later on, I might have to buy you a beer.
Oh, that would be very kind of you if you're around.
Cool. Well, thank you very much, guys, and see you next week.
Cheers, guys. See you later.
Bye.